I contend that we're still in crypto spring, right? Everyone's like, oh no, crypto winter's back. I'm like, no, it's still spring. It's just, there was this hurricane, this early hurricane came, Hurricane Sam. And yeah, it caused another wave of unwinding of leverage. And now we got these two other risk factors that are Binance and Tether. So let's do the Binance math. I mean, Binance is big. I mean, they just had $10 billion of outflows. And
Is it that much?
A little rise. Pardon?
Was it 10 billion in outflows?
Yeah. 10 billion in 3 days. Yeah. 2, 3, and 5. I mean, they had 5 in one day. So huge. But they handled it well, as you said.
Mark Yusko, the founder, chief investment officer, and managing director of Morgan Creek Capital, has described the present state of the crypto market as crypto spring, the brief period before a pleasant crypto summer. In a recent interview with Blockworks Macro, the renowned hedge fund manager discusses his outlook for the cryptocurrency market, especially amidst all the fear, uncertainty, and doubt surrounding popular cryptocurrency exchange, Binance. Due to the FTX collapse, increasing distrust in centralized exchanges, and reports that Binance was under investigation for money laundering, the cryptocurrency exchange has seen unprecedented outflows. Since the collapse of the Luna token and algorithmic stablecoin, UST, there has also been a lot of speculation about the possible collapse of dollar-pegged stablecoin Tether. In his interview, Yusko explains that Binance and Tether may be the last risks left for the cryptocurrency market. However, he states that Bitcoin has held up well despite several collapses, and he does not expect it to fall too hard even if these projects unravel. Yusko also explains that every new innovation is bound to face some troubles. The cryptocurrency industry is currently facing its fair share, but that doesn't mean crypto is going to zero. We will now take you to Mark Yusko's interview. But before we do, please take a little time to like this video, subscribe, and turn on post notifications for more videos like this. Thanks, and enjoy the video.
And part of it is, this is really big, right? It's 80% of global market share, by last count. So it's big. The other thing is it's distributed, right? It's not one, there's Binance in this country and Binance in this country, and they're actually different code bases. And so it's actually a pretty interesting network that he's built, global network. It's pretty amazing. I mean, the guy's actually executed as well as anybody. So, but the issue is, if that run on the bank continues, that will put downward pressure unless people just take it back and put it on a ledger, which would make me happy as owner of Ledger, which now has gone from 15% of all the crypto in the world to 20. So let that sink in for a second. 1 out of every 5 crypto is on a ledger. If it's a temporary shift from exchange, now we still need exchanges. How are we going to buy and sell, to each other if we don't have exchanges? We've got to have exchanges. But if it doesn't go down, and if it's not over levered with BNB, which it probably isn't for all the reasons you said, then I'm okay. But even if the run on the bank keeps going, as a percentage of total assets, it's still relatively small. So let's go then to Tether. Tether, 65 billion. It's gone from 85 to 65. They handled the 20 billion, no problem. But there's a question. Again, the data in the FTX filing said, they created 36 billion tethers. Like, over what period? How much of that was double and triple counting? But let's assume that was the number.
Right.
So let's say half of tethers aren't real. Okay. So that'd be $35 billion, $36 billion. Bitcoin's a $350 billion asset, $340 billion asset. Okay, 10%. Would 10% take it to zero? No. Would it hurt? Yep, it would hurt. Probably make new lows, but it won't go to zero. And then once that's done, once the Tether FUD's gone, then we can go back to building and growing and using. Because at the end of the day, the core, and it's different for Bitcoin versus other crypto, but Bitcoin, the core technology of a better money, that ain't going back in the bottle. Right?
No, it's not.
It is the internet of money, or the internet of value, or the truth net, as I like to call it, replacing trust with truth. So that isn't going away. Now, we need exchanges. We need the ability for the common person to get into, but maybe what we have is this X, right? Maybe the exchanges were the early thing that we needed, and they're going to go down in importance. And the ledger is what we're all going to end up have, and we're all just going to have our own wallet. And it literally is the iPhone moment. In 2007, when this came out, stock went down 40%. And everybody said, I'll never pay $500
Really?
for a smartphone. The aficionados bought them, for sure. But the average person was like, I'm not spending $500 on a phone. I got my flip phone. I'm perfectly fine. But what we didn't realize, it's not a phone. It's a supercomputer.
It's a supercomputer in your pocket.
It's a supercomputer.
Yeah.
And we all needed them, and we all have them. And we don't pay $500. We pay $1,500. Any evolutionary tech is going to have a series of failures, and resilience and the ability to come back. In fact, I did my Around the World with Yusko year-end review yesterday. And it's funny, I was going back through and I had done the seasonality of crypto, talking about why crypto winter is actually a good thing. And in one of the quotes, which I really love, it says, there's a word for summer, there's a word for spring, there's a word for fall, but the word for winter is perseverance.
Today's episode is sponsored by iTrust Capital, the #1 crypto IRA platform in America. We allow you to invest in your favorite cryptocurrencies without worrying about taxes. That's right. iTrust Capital allows you to buy and sell your favorite cryptocurrencies completely tax-free. That means if you invest $10,000 into Cardano and it grows to $100,000, all of your profits are tax-free. Why is it tax-free? We took the existing retirement account industry and flipped it on its head. Instead of boring stocks and bonds, you can invest in crypto. How is it secured? Through Coinbase Custody, one of the leading cold storage providers with a $320 million insurance policy to protect against theft, hacks, and loss of funds. Roll over your existing retirement account, or even start a new one from scratch. Questions? Schedule a free call with one of our crypto retirement account specialists, and they can help you discuss your options. Start your crypto IRA today and retire early, only at iTrust Capital. Click the link in the description to open a free account now.
In his interview, Yusko also shared an important piece of information about FTX co-founder Sam Bankman-Fried's parents. According to recent reports, the two Stanford law professors, Joseph Bankman and Barbara Fried, may face scrutiny over their role in their son's fraudulent business practices. During a congressional hearing last week, current FTX Chief Executive Officer John J. Ray III told U.S. lawmakers that Joseph Bankman received payments from the business. The family certainly received payments, the FTX executive added during his testimony. Prior to the congressional hearing, there were reports that SBF allegedly purchased around $121 million worth of real estate for his parents and other FTX executives. According to SBF, the $16.4 million house his parents live in the Bahamas was intended to be the company's property. But the property's documents have their names. SBF said he didn't know how the names were papered in. SBF's parents both teach law classes at Stanford University, and according to recent reports from mainstream media, they are obsessed with ethics. You would also recall that Shark Tank celebrity and former FTX spokesperson Kevin O'Leary said that he and other investors failed to do their due diligence before investing in FTX because SBF's parents are law compliance professors. A family spokesperson reportedly stated that FTX paid Bankman for at least a year because he worked on charitable projects for the now bankrupt cryptocurrency exchange. Here's what Mark Yusko had to say about Joseph Bankman in his interview.
The structure that Peter Thiel used to create that massive tax deferral, Sam Bankman-Fried's dad wrote. He wrote the code, so to speak, to avoid the taxes.
If he wrote the code on tax evasion, what other code did he write and teach to his son? In other news, 3 Democratic campaign groups to which SBF donated are planning to return over $1 million of the donations, according to recent reports. The Democratic National Committee, DNC, the Democratic Senatorial Campaign Committee, DSCC, and the Democratic Congressional Campaign Committee, DCCC, are reportedly planning to return $815,000, $103,000 and $250,000, respectively. What are your thoughts on Mark Yusko's interview and the law professor's role in their son's fraudulent business practices? Please share your thoughts and observations in the comments section below. If you are yet to do so, Also ensure you like this video, subscribe to the channel, and check out our other videos on the FTX collapse. Thanks for watching.